I'm Scott Tibbles with the Investing News Network. I'm here today at the 2018 International Mining Investment Conference in Vancouver. Joining me now is Benj Gallander, President of Contra the Herd Investment Letter. Thanks for joining me, Benj.
It's a pleasure to be here, Scott. Thanks for having me.
So, it's the end of day one at the conference here in Vancouver. How does the mood feel so far?
You know what, I love coming to these conferences. Cambridge puts on really good ones. I've been coming for years. You get a diverse group of speakers. The people, I was just talking to a gentleman, he said he got to talk to many of the people that he wanted to. It's fairly intimate in a certain way. I had a great crowd tonight. The room was full. So I'm happy to be in Vancouver too. I live in Toronto, so it's always nice to come out here.
Fantastic. And so, speaking of Toronto, you said at PDAC 2 months ago that prices for some resources might indicate a bubble ready to burst. Any thoughts on how commodities are going now?
Well, gold has just been coming off. It's been pretty flat, though, over the last while. We're seeing a lot of demand from places like China and the economy, and there is a question about how high things might go. We are used to these cycles in commodities, and they go very much with the economy. And right now, the global economy is really firing on most cylinders. The question is, how long will it keep going? Employment is great in many countries. We're certainly seeing that in North America. Unemployment is at a low for, we're talking around 2 decades. Not in both exactly, but pretty close on average. So I think we still have some legs left, but at some point these things certainly do turn, and often people aren't ready for it.
Okay, so, and as the name of your newsletter suggests, you're a contrarian. Is there much out there for you to buy at the moment?
It's much harder for us to buy things now. A few years ago, my list was about 350 stocks to watch. Now it's closer to 250 stocks. The thing about what we do at Contra the Herd is we don't buy a lot of stocks. In the 2 portfolios, we have between 15 and 25, about 6 of them overlap. So all we have to do is find a few positions, and that's it. So last year I bought only 3 companies, which was the least in a number of years. Ben and Phil, who managed the Vice President's portfolio, they bought more. But to be able to cherry pick, especially in sectors that are out of favor, that's one of the great ways to get great returns, and one of the reasons our returns are amongst the highest out there.
Okay, and so are there any success stories that you've been looking at that have been flying under the radar?
Well, I like to think in terms of commodities, Alacer is a company that will hopefully come onto its own. We've held it for a while. It really hasn't moved. It's a gold company out of Turkey. They're far away from the action in the capital city and some of the political problems there. So this is a revenue-producing company that is profitable. They're expanding their asset. They're expanding it on time and under cost. And in the mining sphere, that often doesn't happen. So it's trading a little over 2. I think it can go over 6. But quite frankly, I mean, it's very successful, but on this one, we expected it to move earlier, and it hasn't. So I think it might have to wait until production comes online from this. So in the next couple of years, I think hopefully it'll start to move.
Okay, and how far along is their project?
It's come along quite quickly. I'd say they should be done within a 2-year timeline from now.
Okay, and so speaking at your talk earlier today, you said that cryptocurrencies and marijuana are for people that want to make money very quickly, but that they had to be very wary. Can you just elaborate on that point?
Well, if you look at cryptos, when I was first told about Bitcoin about 5, 6, maybe 7 years ago, I mean, it was the currency out there. There were very few. And when I'm on television every few months, I get asked about them. And a number of months ago, I was saying there were, over 1,000. Now there's almost 1,700. So most of those aren't going to go anywhere. A lot of them are, quite frankly, sketchy con jobs, and one has to be very, very wary. With marijuana, it's similar. There's so many companies, only so many will be successful. So it can be worthwhile. It's not what I do, but for someone who wants to diversify, they could buy an ETF. But again, you have to be wary. There's unfortunately a lot of scammers out there. They look at the hot fields. Marijuana is a hot field, and the valuations there make very, very little sense even for the big companies. So I think things will cool. I think there's money to be made, but you really have to study them. It's great to talk to management, and don't listen to your friend who says this is great because I heard it from my friend's cousin who lives in Wawa.
Okay, and just wrapping up, can you just share with me some thoughts on challenges that are facing the market at the moment?
Well, I think one of the challenges is the markets in North America have gone up so much, especially the U.S. So when in 2009, 2010, 2011, when we were buying a lot of U.S. financials, it was a time to buy. It was a time to buy stocks when things were beaten up and blood was running in the streets. Now that the markets have moved up so far, there's less possibilities out there. And also, the governments in North America, they should be running surpluses now. You've got unemployment down at levels where it hasn't been in years, and therefore you've got to get your economies in order. And unfortunately, Donald Trump's tax plan, they're going to run about $1 trillion in debt over the next number of years. In Canada, the feds, the provinces, they're running more and more debts. So when we get in trouble again, which we will, they're going to have less ammunition in the tank to try and turn things around. So our governments are being very, very negative in terms of the way they're operating. They're not doing what's best for people. I mean, people know if you are having financial difficulties, that's not when you want to take on a super amount of debt. When things are going well, that's when you want to pay it off. Our governments should be so sensible.
Okay, sure. And just finishing up, is there anything extra that you'd like to add?
Well, it's a pleasure to be here. People should do a lot of reading. A great way to get good returns is to pay off debt. If you have debts, instead of investing in stocks, pay it off, and you'll be further ahead.
Great. Well, thank you for joining me here today, Benj. I'm Scott Tibbles with the Investing News Network here in Vancouver.